Perfect. There we go. You guys, I'm horrible with technology. I'm horrible with technology. But sound should be good now. All right, perfect, perfect, perfect. So we'll do this. I'm going to address questions. We'll probably try to keep this about an hour. I know a lot of you guys are already tired. A lot of you guys woke up early this morning and hung out with Jason Greystone in the London room. So shoot in your question. I'll give it an answer, and we'll try to make this a productive use of our Friday before heading out and enjoying our weekend. There we go. Took me about a minute to get the sound on each of these places, but I eventually got it done. What broker do I use? Now I can't address broker questions. I can't recommend brokers. I can't do anything like that for legal reasons. So sorry about that. If you're looking for broker suggestions, if you're looking for me to tell you what broker to use, what broker I use, that is basically the same as a recommendation. I cannot do that. It's nothing personal. I just don't want to get in trouble. Believe it or not, we're in a day and age where everyone likes to sue for everything. Same thing with me giving financial advice. I'm never giving you financial advice. Everything we talk about here are just my opinions of the market. All right. They're just my opinions in the market. They're not saying, hey, you should go out and buy this. You should use this type of position size. You guys should accept the risk. You have to make those decisions on your own. Get the question, what is reasonable to expect from the CTS system? What do you mean by reasonable? And also, how would you trade a small account? Now, we'll answer that question first. How would I trade a small account? I would trade it the same way I would trade a large account. And that's the cool thing about trading and our market is people think that in order to make more money, right? In order to make more money, you have to do something different. So if I want to make $10,000 a year versus $2,000 a year, I have to do something different. I have to add more pairs. I have to find more trading opportunities. I have to do a different strategy. When in fact, the process, right? The process should stay the same. So if you're starting with a small account, let's say you're starting with a $5,000 account, right? And you're consistently making profits, right? You're consistently making, whatever, 3% a month, 5% a month with that $5,000 account, right? If you want to make more money, what do you think you need to do? What do you think needs to be done if you want to make more money? Yeah. You just need more capital in your account. You just need to increase your position size. So the process stays the same. The trades you're taking can stay the same. The process using for your stop loss, your target selection, right? All of that stays the same. The only difference is your position size. And that's the cool thing about trading. You can do the exact same thing. And as you get better, as you increase your account capital, as you increase your position size in the market, you go from trading a 4 mini lot position size to a 6 mini lot position size, you'll automatically start making more. Now, the issue that I see most traders have is it's a very patient process. A lot of traders want this instant gratification, right? You want to start trading right now with $5,000, and then, okay, you're making, 10% a month, but 10% a month isn't that good enough because you only have a $5,000 account. So you want more, right? Be patient, right? Let your account grow. Let your account grow in a safe way, right? And once you get to that new position sizing level, you'll be able to do some really incredible things. I shared in a video on YouTube. There's a video called The Power of Money Management. It was a video we did, I think this past December, where we were sharing the results from our syndicate program. And we had, over the 2 years of trading in a syndicate, we had a 100% return, right? Not bad, 50% a year on average, right? And then I showed the comparison of what happens when you add money management, and that 100% return could easily go to 160% return, 200% return. So the key is being able to trade consistent enough to keep working up your position sizing strategy. But warning, if you do so too quick, right, If you do so too quick, you're going to start losing money pretty quickly. And I know that's the problem I used to make a younger me in trading, right? I used to have these fantastic months of trading. I used to have a 10% month, a 15% month, and I would be like, oh man, this is awesome. I got to start trading a bigger position size. That way I can take advantage of this hot streak, right? So I would have a good month, 10, 15%. And then next month I would switch my position size. I would double it. And what do you think happened? What do you think happened as soon as I doubled my position size? Yep. Boom. Drawdown right in my face, right? Because what goes up must comes down. You guys that have been trading for a while, you know that an equity curve, right? Your trading just doesn't go straight up, right? You have hot streaks, you have cold streaks, you have hot streaks, you have streaks where you're doing nothing, right? It ebbs and flows just like a price chart. And what I would do is, as soon as I got off of my hot streak, I would increase my position size, right? I would double my account size, but not double my account size, double the position size I was trading. And I would do that just in time for a losing streak, which means what? What happens when you double your position size right before a losing streak comes? Some of you are like, yeah, I know, Akil. Boom. You hit a drawdown, but you lose double because now you're trading twice as big. And now you have to work twice as hard the next month just to get back to where you started, right? And it's that consistent wave of just going back and forth. So a smart position sizing strategy is a very, very, very patient grind, right? Because you don't want to increase too soon, right? Because of that back end potential of that drawdown. You want to increase once you get to a certain level. So even if you hit that drawdown, right, you can still maintain that new position sizing level. So the key is the very long-winded answer. The key to I guess if you're trading with a small account size, just trade the same way, just with a smaller position size, right? And as your account size grows, you can do the exact same thing. The only thing that changes is how much you're risking and how much you're looking for potential reward. Slow and steady. Yep. Yeah, I see a lot of people on the YouTube over here. Yep, doubled my loss, doubled my loss. You guys have probably been there before. If you had an account with $1,000, how many lots would you trade? A lot of that's going to depend on your strategy. It's going to depend on how big your portfolio is, but I would definitely go in micro lots. So at the 10 cent, 20 cent, 30 cent per pip. I wouldn't even go to a mini lot. $1 per pip is just way too much if you're going to be trading $1,000 account. I would start with micro lots. Honestly, I would do this, right? And I hope not to offend anyone. I got a little pushback on the video I did the other week telling people that, hey, you're not going to be able to start with $500 and make $1 million. I'm sorry, but I wouldn't even trade. I would continue to save money, right? I would focus on the skill of trading. So I would still work on my skill of trading, honing my strategy and whatnot, maybe even demo trading just to get used to it. And I would continue to save money. That way you can start with a bigger account size. Because in all honesty, let's be real, right? If you're starting with $1,000 and you're trading micro lots, you're gonna get you can get the feel of trading, right? Which is good. That's very valuable, but you're not going to make any money. I think the impression of taking $1,000 account with micro lots and turning it to $5,000 in a year, that's just not going to happen. So what you might as well do is continue to learn the skill of trading while you save up capital. That way, maybe in a year or so, you can, maybe you have $2,000 to start with, or maybe you have $3,000 or $5,000 to start with, and then you can actually start getting the ball rolling with that type of account size. So again, I apologize. I had a client of mine the other day shoot me an email explaining how he disagrees and how he can start with a $500 account and turn it to $50,000 in a year and a half. And I'm like, sorry, it's just not realistic. I never like to say nothing can never happen, but it's not realistic that you're going to take $500, turn it into $50,000 in 2 years. So I'm a student. I want to get into trading and stuff. Do you have any advice? Yeah. Start slow. Focus on the process. Eliminate. I know it's hard. Eliminate any thoughts of how can I make money, right? Money is the root of all evil. Money will cause most of your problems in trading. It's because as humans, we have this emotional connection to money in every aspect. Think about it. Think about how happy you are when you get your paycheck. Think about how sad you are when you get your paycheck and it's less than you expected. Think about how sensitive it is having conversations about money with other people, right? Isn't it a big thing in the workplace? You don't ask your coworker how much they get paid, right? We're all sensitive about money, and it stirs up a lot of emotions. And when you use emotions in the market, that's what typically causes you to blow accounts. So I would focus on the process, focus on how to trade, how to read a price chart, the very, very basics, right? Those boring foundational, the boring foundational parts that won't make you money right away, but are the key to developing a solid strategy in the future. So focus on the basics, master the basics, and just take it very, very, very slow, right? There's no need to rush into the markets, right? If you rush into the markets, you're just in a rush to lose some money. Giovanni over here on in the our live room says, can you show example of a cipher formation? Yeah, we actually just had, and I'll bring the chart over for you guys on YouTube. We actually just had a really good, a really telling cipher formation here on the Aussie dollar, right? This one, we talked about it yesterday. This is a trade that traders are going to remember forever. This is a trade that traders are going to remember forever, right? We had a cipher formation here. Hope you guys are all seeing my charts. You should be. We had a cipher formation right up here. Boom. Get up there. Bang. Right? This is on the daily chart. This cipher formation completed late February, early February, I believe. Early February, right? What month is it now? It's March. Early February. Traders got an entry right at 76.40s, right? And this is a great example of the reality of trading. They got an entry at 76.40s, and guess what they did for a month? They took a slow, disgusting, nasty, painful drawdown for a month, right? I'm talking waking up every morning, rushing downstairs to check your charts, and you're just seeing that you're more and more into the red, right? Think of it like a slow torture. I personally like the trades where you get stopped out right away, right? If I'm in a trade that's going to lose, stop me out right away, painless, right? Guillotine, chop to the head, boom, I'm done. I can reload for the next trading opportunity. This is one where it's like, what is it? Death by 1,000 cuts, right? And you can see it just consolidated. Oh, sorry about that. Bring it back on. Consolidated before finally rolling over, right? Finally rolling over to target ones, which were up here at 75.16s yesterday. So a perfect example of a cipher formation, Giovanni, not the best one, but we never violated X. We never even tested the X leg. And it did roll over to be a very profitable pattern. I think it was about, what, 200 pips you guys got on that? Just see real quick. Oh, 119, 120 pips on there. So not a bad pattern formation. And even better, right? Psychologically, I told these traders, this is going to be the one you remember forever, because there will be more trades like this. Hopefully not this painful, but there will be more trades like this where it just tempts you every day to get out the trade, cut my losses, do this, take profits early, right? And for those traders who made that mistake, they sabotage themselves. For those who stuck with the trade, you were rewarded. Patience pays off in this industry. Literally, patience literally pays you, right? Your account size gets bigger. And this was no doubt a tough one, but a great example. So there's a cipher formation right there, a good example of one. Oh man, someone on YouTube just said during my back testing, I was in a trade for a year. Golly, a year. I'm guessing higher time frames. Yeah, that's one of the reasons I don't trade off the daily charts and I don't position trade. I can't stomach being in a trade for months. Now an investment, that's a different story, but a trade, I'd go crazy. Hey, Tony. I don't think he reads the questions on YouTube Live. Yeah, sure I do. You guys are just not the priority, though. Understand that, right? I've been reading them from the live room. I've been reading many from YouTube Live, right? But there's a lot of you shooting in questions. I'm only one man. I only have one set of eyes. One of my eyes doesn't work too well, hence the glasses. So, be patient. Be patient. If you want more advice, right? You want more personal interaction, come in a live room. Come and join a small group community, right? Craig says, recommended books on trading. Sure. Jason Greystone, if you check out our Trade Empowered YouTube page, Jason Greystone did a great video on this around the end of the year last year. And I agree with all these books, but I got a few of them right here. One book is, actually they're in back of me. One book is Trading in the Zone by Mark Douglas. I think that's a must read. Market Wizards. I'll give you my top three, not in no particular order. Trading in the Zone by Mark Douglas. May you rest in peace. Great book on trading psychology. One Good Trade by Mike Bellafiore. Great book on kind of an insight on what it looks like to actually be a trader. I'll give you a clue. It's different from what you probably think if you've been anywhere on internet land, aside from our sites, of course. And then Market Wizards by Jack Schwager, I think it is actually, where he does interviews of the best traders of all time. There's three Market Wizards. There's a Market Wizard, a new Market Wizard, and a hedge fund Market Wizards. I think the first is the best. The second one is a little bit more currency and Forex related, so that's worth a check out too. I never got through the hedge fund Market Wizards. Just didn't keep my interest. So 3 books. One Good Trade, Mike Bellafiore. Trading in the Zone, Mark Douglas. And Market Wizards, Jack Schwager. Julio says, Akil, for understanding of patterns, how do you think the behavior of the traders form the patterns? It's the buying and selling from institutional traders. I had a great conversation with a guy who used to be an institutional trader a long time ago. Kind of blew my mind. So I wish I would have paid more attention to that conversation, but that's how he explained it. It's the different buying and selling and how they have to kind of sneak their way into the market and test different levels. And typically that has a lot to do with how these pattern formations are formed. I mean, just the ebbs and flows in market in general, but during those consolidative periods, that's when you notice a lot of advanced pattern formations. You guys should come to South Africa and do a program here. I keep getting asked that. Life is busy. I don't think I have the time to travel out there, but yeah, maybe one day. Gold is at a pivot today. It's also at a bullish cipher formation, so it'll be interesting to see. It'll be interesting to see what happens today in our non-farm payroll report. Big jobs number coming out. Typically, I had a conversation the other day on someone about the gold trade, because typically gold and dollar have an inverse relationship. So you see a strong dollar, you see weak gold, you see a strong gold, you see weak dollar. It's actually they've been moving in the same direction, right? We've had both a strong dollar and strong gold this year, which is kind of crazy. And the trader was saying, hey, be warned, jobs number comes out today, interest rate hike. That means there's going to be dollar strength. So gold's going to go bearish. And obviously we don't know what's going to happen, but I wouldn't be too quick to jump on the bullish dollar bandwagon. I mean, a lot of that has been priced into the markets already. That's why we've been seeing dollar weakness over the last few days. A lot of that has been priced into the markets already. So I don't necessarily think a good jobs number today or even the interest rate hike next week is going to have as much an effect on the market as people think. If anything, here's what I would guess for today. Abdullah, I'm the coach for the 12-week transformation. If anything, I would guess, I wouldn't be surprised if this happened. Let's say we get a positive jobs number. We had a very good ADP number out yesterday. Let's say we get a positive jobs number. Would not surprise me if the market gave an initial bullish dollar reaction, kind of to sucker all of the rookie traders in there, the newer traders in there, right? Saying, oh, good jobs number, that means a rate hike for sure. It's already 98% priced in, right? Good jobs number, that means a rate hike's coming for sure. Let's buy dollar strength, right? Good news, strong dollar. That's what it's supposed to be. Wouldn't be surprised if we saw that initial reaction maybe for the first 15 minutes or so, right? And then guess what happens after that? I would not be surprised, right? Yeah, if we reversed all the way back and saw dollar weakness, would not surprise me. I think the market's going to try and catch some suckers today. I mean that suckers in the most polite way possible. I used to be a sucker, so it's okay. I think that's what we're going to see. We're going to see the market react. We're going to see the smart money get in after the overreaction, and we're going to see a lot of traders get burnt. We may see that the opposite direction as well, but that's what I predict. Is this going to happen? I have no idea. I don't know what the news is going to be. I don't know what the reaction to the news is going to be, but that's what I would expect just based off my experience. The UK live trading room isn't shown on the website anymore. Is it still available? Yeah, it's still on the website, Dennis. It is right on the tradingpower.com homepage. Yep. Right at the top. In fact, it's the first live room on there. The first live room on there. Tony's Law and Dollar Yen. Nice. All right. Gabrielle says, once you get educated, you know how to stay away. When you say you don't trade during the non-farm payroll and even close positions, that includes swing trades. Yeah, I have 0 positions open right now. I am all flat for the non-farm. Yeah, so I'm just enjoying the ride. Normally this would be a vacation day. It's snowing outside, so it wouldn't be a golf day, but I would do something fun today. But decided to come in and oh yeah, War Room is starting early, guys. For you syndicate members, Charles is getting up early today because of the non-farms. But yeah, normally this would be an off day. I'd go out and enjoy life. I'd enjoy the beauty of trading. When will the new website when will the new website be up? The new website is up. It's just not open for everyone yet. So right now it's only open for our transformation members, our ultimate trader transformation members. But I don't know when it will be open for the public. Gabriel says, not easy. I still find it difficult, but hey, you won't have to lose money. Yeah, I'll tell you what, once you start losing a lot of money trying to chase these big events, it gets a lot easier to stay away. Once you realize that you're more likely to lose money than make money, it gets a lot easier to stay away. What is your morning? Oh yeah, the daily chart's a whole different story. Yeah. Show me your full trading room. Sure. Head over to tradingpower.com. Right? Click on the New York live room and sign up for a week trial. We'd love to have you in there. What is your morning ritual before you start trading? Well, first thing I do, I wake up, I look in the mirror, and I say, Akil, you are awesome. You are amazing. How is someone this awesome allowed to walk this earth every day? You're a good looking man, Akil. Flex for me. And I do a little flex in the mirror. Right? It's the first thing I do, pump myself up. Seriously though, I do that. Seriously. Yeah, that happens. But the first thing I do is I come downstairs and I try to do something not trading related. So I try to get a little food in my system. I'm big on health and nutrition. Try to get a little food in my system, and I kill about a half an hour doing other stuff. So checking emails, Facebook stuff, Twitter stuff, something not trading related. Because what I've noticed is that although I wake up, right? Although I wake up and my body is awake, my mind still takes about a half an hour to really turn on. So in the past, I would get right into the charts. And if I have an open position on, I'll check it. But in the past, I would get right into the charts and my brain just wasn't as sharp and I would miss opportunities or make mistakes. So I decided to give myself that half an hour before to wake up and do some other stuff and then start my charts. So then, after I'm done that, I go and do my my top-down analysis. I take my notes of what I'm looking for today. I go and read some news articles. I go and update the syndicate or whatever education stuff I have to update. And then I take about a half an hour, 45 minutes to eat breakfast, watch some TV, do something non-trading related. And then we load up the live trading room and we kill it for 3 hours. We kill it for 3 hours. I actually did an article on this for you guys that read Forex or FX Trader magazine. I did an article kind of breaking down my entire trading routine for the day. So it's if you go to just FX Trader magazine, just enter Akil Stokes in the search, it'll give you the list of the articles I wrote. You can go and read about it there. It's a good question. Yeah, everything is a routine though. Everything from how I wake up to how I do my analysis, the entire same IPDE process, everything is routine. It's very important as traders that we have a ritual. Rituals in general keep us comfortable just as people, right? We're a lot more comfortable when we kind of know our routine, right? We know we have to go to work at 9 o'clock. We know lunch is at 11. We know this is at that, right? We get kind of out of whack when we get surprises. It's called knocking you out of your OODA loop. So when you're at work and you're working on a project, you know you have 2 more hours before the project is due, and your boss comes over and is like, "Hey, I need that project now." And you're like, right? We get out of that OODA loop. So routine is very important. Same thing for you guys that are sports fans, right? If you notice basketball players, right? Every time they take a foul shot, what do? They step back, dribble, spin, tap the shoulder, and then shoot, right? Same type of routine every single time because it puts you in that comfort zone, right? That ritual puts you in a comfort zone. When you're in that comfort zone, you tend to perform better and you tend to perform more confidently. Tony says my brain needed a rest this week. Tell us something about the Syndicate program. How is it different from the live room? Well, the Syndicate program is really like an introductory, not course, but an introductory place where you can get involved with trading power. So if you don't have 3 hours to spend with us in the live room, it's the next best thing. Because in the Syndicate, Charles, he's live right now, but he does a daily war room meeting. So he does about a 15 to 20 minute meeting each morning, taking you around all the trades that are on his radar, keeping you updated on the trades that he's involved in, and just showing you what he's looking at and why he's looking at it. We have also our trade floor desktop where I'll shoot in my trading ideas both short-term and long-term. And then a few times a week, either once or twice a week, I'll record a video for you guys in the Syndicate as well, sharing with you some of the longer-term ideas that are on my radar. So it's a place where you can stay involved. It's a place where you can kind of get support. It's a place where you can kind of see what the reality of trading looks like. It's great because you get to see us at our best. You get to see us at our worst each and every day. And it paints a very good picture of what you honestly have to look forward to in trading. It's not, you see stuff on Twitter, you see stuff on YouTube, and what does everyone share? Everyone always shares their best moments, right? 1 minute into the non-farms. Everyone always shares their best moment. That's like just in general, social media, right? Does anyone ever share anything bad aside from wanting to get attention? Right? No, everyone shares their best thing. Everyone wants to show the best of themselves. And you see that with traders. You only see people, posting these screenshots from their mobile phone. Oh man, big week, made this, right? But the next week you don't hear from them, right? You see this trader saying he did this and did that. All these good things. And it paints the picture that trading is all good, right? There's no negative. There's no downside of trading. You just come in, you make money every day, right? And that's not true. If you're serious about trading, you need to know what to expect. And the reality is trading is a hard, horrible grind. It's a hard, horrible grind. It's like working construction. You come in each and every day, you do some heavy lifting, you leave sore, maybe you make money if you're lucky, right? Sometimes you lose a lot of money, and then you come in, you strap up the boots the next day and do the same thing. Every single day. It's a really tough grind here. And that's what we show you in the Syndicate. We show you the reality. The TV's not working. We show you the reality of what trading looks like. And for those who just want to use it as a get rich quick scheme, it doesn't matter for them. But for those who are serious about going into trading, they want to see kind of the long-term outlook on what trading is. It's a very, very, very important part. Non-farms came out. I didn't have a chance to turn on my TV, but what's the number looking like, guys? 235K, wages increased by 2.8, 235, so that's a big number. Estimate was, I think, 190, if I believe, right? We're seeing some reaction in the market here. Again, we initially saw a weak dollar. Look at that. And now we're bouncing back up, right? Let's go over to euro dollar, see what that's looking like. Look at that. Initially saw a strong dollar, spike down, and now we're pushing back up. Did someone just say this like a couple minutes ago? I swear, someone might have mentioned that if we got a good number, that we might see an initial dollar push that would sucker some rookie traders into the market before getting no. I must be hearing things. Hey, Akil, how are you doing? Does Trading Power offer an Excel spreadsheet for back testing? Yep, we offer a back testing and money management spreadsheet. Makes your life easier because literally all you have to do is insert the numbers, right? All you have to do is insert the numbers and it tells you how much to trade. It's pretty, it's fantastic. It's awesome. It's amazing. It's the most amazing thing you'll ever use in your trading. It's terrific. It is terrific. Here's a look at it right here. Again, you just insert numbers, tells you when to increase, decrease, when to go to 3 to 4, 4 to 5, 5 to 2, 2 to 1, and does all the work for you. All the work for you. People say I'm showing off. Yeah, but I mean that's a good example, guys. It's the market doesn't have that many tricks. A lot of getting better in the market is about. Do I have the other sheets on here? I don't have the. Nope. This isn't the sheet. This is the combined. I don't have the full. I loaded up the wrong spreadsheet for the back testing deal, but a lot of getting better in the markets is experience. Market doesn't have too many new tricks. I mean, this has been a very difficult year. You can ask professional traders across the board. This has been a rough year of trading, just because the market's a little bit more. There's low volatility and then high volatility in certain moments because we're on edge about Trump, we're on edge about interest rates, we're on edge about French presidents and whatnot. There's so much stuff going on. But in general, the market tends to do the same thing over and over again. The key is most traders don't take the time to jot it down. Most traders will see something, they'll ignore it, and then blah, 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 then it'll happen again, they'll get burnt again. The difference between those type of traders, those newer traders and the professional traders, right? We see something, we jot it down, we take notes, right? We see it again, we jot it down, we take notes, and eventually we learn how to handle those situations. So it's all about processing and seeing the same thing over and over again and having a way to attack it. And you can predict, I mean, you can kind of get an idea of what the market's going to do. Kind of get an idea of what, so, I mean, Jason Stapleton did the same thing the other day. He did a show talking about Snapchat. Same thing. We've seen this before with different IPOs, right? Different IPOs with bad companies or unproven companies. And you see initial rise, everyone's excited. Ooh, Snapchat, big, shiny, new, buy. And then a few days later, it trades under the opening price. And it's like, well, the truth showed itself. The market is there it's going to get the suckers. And again, I was a sucker, so I don't mean that in any type of negative way, but it's going to get people. That's what his job is to do. It's going to trick the sheep, right? Trick the sheep, and then capitalize on its own. Akil just finished analyzing the euro dollar. There's a very nice double bottom. I believe we might see a bullish trend to the Fib 618 in reverse. What's your opinion? What time frame are you looking on, Giovanni? Shoot me a time frame. I'll give it a look. On the daily. Depends on the size of the trade, Tris. All right, let's go over to our daily chart on euro dollar. Let me just read the question one more time here. I'm doing some analysis. Look at you making me work on a Friday. Just finished analyzing euro dollar. Very nice double bottom. You might see a bullish trend to the Fib 618. I see no reason to predict that. Right now, we're just in a neutral zone. I mean, here's how I would look at it, right? We've got resistance up here. We've got support up here. On this time frame in the middle, I don't think it's worth doing anything here until we get a clear decision on what the market wants to do. Right now, we're just sitting at about the 50% level between our previous swing low to swing high, right? So I have no reason to predict that the market is more likely to come up here than it is to come down there. Now, recently we've been in more of a bearish trend. So if you held a gun to my head and made me pick one, right, I would guess lower. But there's I don't see any reason to predict that, this is more of a consolidation than a double bottom. Let's put it that way. So I wouldn't see any reason to predict that. So that's my opinion on it. That is my opinion. Elvis says, let's go gold. What is gold doing, Elvis? Are we up or down? Gold strength or not? James is looking at a bearish cipher forming on the Aussie dollar 4-hour. X at 76.80. We've got Bella looking at a euro dollar bearish Gartley on the 4-hour. 106.68. We've got Craig looking at a cipher formation on the euro yen on the 4-hour. Nice. Let's go to Aussie dollar 4-hour. Check it out. Now I tell you what, I wouldn't. Okay, so here's what James is looking for. I would actually take this full leg, James. James is looking at this right here. X leg starting at 76.86s. Looking at that swing high to swing low right there. Right? You can see our 3D2 is hit. Looking at Fibonacci extension, swing high to swing low, X to A. See that 127 being hit. And he's looking at a cipher formation looking like this. X to A to B, B to C, and C to D right up at 76.44. 76.44. Chart patterns or harmonics? Are harmonics needed? Well, they're kind of the same thing. I mean, harmonic movement is or can be chart patterns as well. So you got to be more, give me a little more detail if that question, I can answer it for you. Do you mean like advanced pattern formations, like the funky little sounds like bats and Gartleys and ciphers and sharks and crabs and all that stuff? If that's the case, you don't need to trade those, not at all. You don't need to trade those at all. I mean, you don't need to trade simple patterns. There are so many ways to trade. There's no one magic way that works. You can trade. All that matters is that you consistently trade the way that you've chosen to trade well. Whether it's Bollinger Bands, whether it's Deutschian channels, whether it's support and resistance, whether it's a Fibonacci inversion, combined technical score, Fibix favorable excursion, 2618. It doesn't matter. As long as you master and you're good at what you're doing, then you can have a good career trading. I've been trading since 2007. I started off in the stock market for a few years, 2007 to about 2009-ish in the stock market, and I went to Forex. Started getting interested in Forex, I believe 2009, 2010, I think, somewhere around there. I trade based on structure, but it's so hard for me to see advanced pattern formations. Well, hey, I would say this. If your structure trading is going well, who cares about advanced pattern formations? You don't need to trade them, right? Stick to what you're doing well and continue that way. You don't need to do anything other than that. Master how you trade structure and have a very profitable career doing so. I trade 9 pairs active. I met Jason Stapleton was my mentor. So he's the one that taught me how to trade. That's how we met each other. What else am I seeing? I'm trying to get a. Gabriel says also bull cipher on the euro dollar if C pushes up to the max level of major structure. Gabriel's eyeing a euro dollar short. I'll admit finding advanced patterns where the AB completes on a long wick, hard to see. Got to train your eyes. So get better. Got to train your eyes. Can you please give some analysis of pound dollar on a daily chart? Sure. Sure. Hey, look at that. Someone on YouTube wants to see a pound dollar as well. Pound dollar on the daily chart, right? So pound dollar, we've been trying to get short here for the last few days. We actually had a couple opportunities. And we're looking at a move. We're right in the middle of our gap here. So we're in a little bit of a funky area, but we're looking for a move down to about 120s here on the pound dollar. Now that's on the daily chart. There's not much happening at all. On the lower time frames, what we've been doing is we've been seeing this bearish momentum, and we've been looking for trend continuation opportunities all week. So although this looks like a straight line here on the daily, down on the lower time frames, this has actually been an ebb and flow and ebb and flow and ebb and flow. So as you go down to the 4-hour chart, you'll see it more so on the 60. And for you guys that are watching on Twitter, I'll have this. This is going to be YouTube usually uploads it right when it's done, so you'll see that. But you can see the ebbs and flows. Each of these little stair steps down, they've been buying or selling opportunities. Excuse me. Now, right now, we're starting to base off. So there's really no trading opportunity right now. You can look for a short breakout here to the downside. You can be aggressive and just do a sell stop order like that and look to sell the breakdown or wait for the breakdown and to retest the structure. That's going to be the safer bet, right? But there's nothing really, I don't really have any trading opportunities on pound dollar at this moment as we're starting to base off here. Does Jason Stapleton still trade? Yes. Yep. Still trades. He still teaches too. A lot of you guys thought he doesn't teach. He's a major part of our newest training course. So he's still teaching as well, just not as active because he has great traders, right, to do the day-to-day stuff. And he has his Jason Stapleton program too, which takes up a massive amount of time. But he still trades, yeah. Just higher time frame stuff, obviously, no shorter time frame stuff. James says, I'm currently involved in the pound dollar. My entry was a breakish structure at 123.90 with a target of 120. Nice. Yep, gold daily, we have a cipher formation. Yep. If you guys shamelessly follow me on social media, you'll see that we posted that the other day as well. Nice cipher on gold. Good eye, very good eye. All right, what else can I guys help you with? We're about 45 minutes in. Again, I want to keep this thing under an hour so I can go off and do what I have to do. So let me know what else I can help you with, and then we'll get started on an early weekend. Let the party begin. Have you ever tried scalping? No, I don't think I think there is 0 point of scalping as a retail trader. And I should say this, I guess it depends on what your definition of scalping is. When I think of scalping, right, I'm thinking of looking to get no more than 5 pips. Typically scalping is like, you're getting a pip at a time, 2 pips out the market, if that. But some traders will say scalping. They'll say like, hey, I'm on a 25 pip scalp. I don't find that as a scalp. The problem with scalping is that as a retail trader, you're typically paying a high spread. So if you're going for 2 to 3 pip targets, something like that, you're basically your spread is cutting almost halfway, if not all the way into that trade. So it's not really realistic for that. So it's not a lot of profit margin. It cuts too much in your profit margin. So I've never been a fan of that type of scalping, if that's what you mean. If you mean like 20 pip trades, 15 pip trades, then yeah, I day trade. So I do that all the time. James says, can I ask which patterns fit your philosophy? Sure. Cipher formations, bat formations, and Gartley formations. Those are the 3 I trade. James says, I've been testing trading 1 minute. Ooh, 1 minute chart. Stay away from that. I'll tell you this, James. Do you have access to range bar charts? Your broker's going to love you if you're scalping on the 1 minute charts. If you have access to the range bar charts, I would, or tick charts even, you're probably better off going to like a range bar or a tick chart. That's going to give you a much better. The 1 minute charts are junk. They're complete trash. They're not going to give you anything. And I've offended everyone that uses 1 minute charts, but I don't care. They're trash. Go to like a range bar or a tick chart if you're going to do that low time frame trading. That's going to be probably a lot better for you. Can you explain why advanced patterns work? They just do, because the testing we've done proved that they work. That's all I've got for you. I did economics at university. First lesson in supply and demand. How does that relate to advanced pattern formation? Well, supply and demand relates to trading in general. That's the buying and selling that goes on. So any type of strategy that you're doing, whether it's a momentum trading strategy, advanced pattern formation strategy, it's all supply and demand. You know, you need, if in order to buy, you need people to sell. In order to sell, you need people to buy. If everyone agrees in a buying and selling price, then price does nothing and doesn't move. But and here's the thing in trading, you don't need to know why stuff works, right? Why does a head and shoulders work? Why does an ABCD pattern work? Why does a pin bar work? Right? We're never going to know all the details of why anything works because the markets are simply a reflection of all the actions that all the participants are doing. So unless we know what all of the participants are thinking and what they're doing, we're never going to fully know why it works. So we have to shift the mindset from knowing why it works to knowing if it works and how it works. Because I'll tell you what, I like this example. I don't really know much about cars, right? I don't know much about cars. I know there's an engine in there. I know there's a pedal that I push if I want it to go, right? I know this. When I go into my car and I turn my key, guess what happens? The car turns on. I don't know all the intricate details of why it turns on, right? I hope it turns on. Let's put it that way. Yeah. I hope it turns on. I don't know all the intricate details about why it turns on, but I know it does turn on. I know historically it turns on, and I know that's proven to turn on when I do that action. And the same thing is with the markets. When you see an ABCD pattern with the RSI oversold, right? We don't necessarily know why the market reverses there. We can make some assumptions, right? We don't know why the market may reverse at that point, but we know that historically, when I get this, when I get that, when I get this, when I get that, all at the same time, then the market typically reacts this way. And it's our job to take advantage of that reaction. Who is the richest independent trader in the world? No idea. Probably someone you'll never know about. I would assume that they wouldn't want to even put their information out there. When you increase, and if I missed the question, I'm sorry, just typing it again. When you increase your position in money management, you increase to how much you have to gain to increase or keep the same. We use a smooth ratio money management system. So it's not, a lot of people will use a fixed fractional one. Use a fixed fractional method, you can get into a lot of trouble because it's essentially very, very, very hard to make it from level 1 to level 2. But then it gets too easy to make it from level 4 to 5. So it takes a long time to initially increase your position size, but then you're increasing your position size too fast that you can run into trouble, kind of like the example we talked about earlier. So I would recommend a fixed or a smooth ratio money management system. That way it kind of smooths up when you're increasing and decreasing, hopefully not, and decreasing your position size. Akil, do you trade advanced pattern formations more or trade trend continuation trades? Both. Have you tested Jason's FTB system? Nope. London is way too early for my liking. I wanted to check it out. I honestly have no idea what it is. I wanted to check it out, but I wasn't going to wake up. I'm not waking up 2 o'clock in the morning, 3 o'clock in the morning. So I'm always interested in new strategy. It is a time of the year where I look to do some continued education. I have a less congested week next week, so I want to do some continued education. That's typically me taking a training course or looking at a strategy or doing something, reading a book. So maybe I'll get details from him, but yeah, I know nothing about it. Sorry. Diversions failed me twice recently. Is this regular? Yes. Especially if you're trading diversions by itself, you're setting yourself up for disaster, in my opinion. Same thing if you're trading an ABCD pattern by itself. You're setting yourself up for disaster. Same thing if you're trading overbought and oversold situations by itself. You're setting yourself up for disaster. Double tops, double bottoms by themselves, setting yourself up for disaster. So no, not surprising at all. When a pattern fails, breaking the X leg, do you enter the other direction? I can. Depends on the situation, but I can. But you should definitely switch your mindset from that, from whatever that original direction was to now potential trend continuation in the opposite direction. Yep. When you say fixed ratio, you mean like every time you double your account? No, fixed ratio is that's the name of the money management strategy. It's called fixed ratio. So not doubling your now. If you waited to increase your position size every time you double your account, you're never going to increase your position size. You guys realize how hard it is to double your account? You realize that? You realize how long it takes to double your account? We talk about having the right trading expectations, right? Let me ask you this. What is an expected yearly return for you? What would you expect to return in a year trading? No money management, right? So no position sizing, no anything like that. What would you expect in a year? If you're having a bad day or crappy day, you should never trade. I got the question. If you're having a bad day, should you trade? You should never trade when you should never trade if you're mentally out of it. So if you're having a bad day, your dog died, you broke up with a girlfriend, or you're sick, you never want to trade when you're not mentally fit. So I would say no. I would always take the day off, because you're more likely to either miss an opportunity, which is going to lose your money, or you're more likely to make an emotional mistake. You know, imagine yourself, you broke up with a girlfriend or boyfriend, you're angry, right? You're going to take that emotion out on the market. You're going to start looking for revenge on him or her and do it in the market. I see 30%. Yeah. I mean, doubling an account is really, really hard. So if your money, and that's the thing with like fixed fractional money management, it takes so long to get to that, to ever switch your position size if you're doing it that way. So it's tough. And then to double your account again is even harder to get there. So it's tough. I want to thank you for what you're doing. I'm following you on Twitter and TradingView, and your work you're doing is great. Thank you. Love the positive comments. Is it wrong to go against the trend formed after these news if my strategy tells me to do it? No, I would follow your strategy. Trade the plan. I love going against the trend. I love it. Trade the plan. I use a fixed position size based off my entire portfolio. So I don't do a certain risk percentage per trade. If you did want to break it up into a risk percentage per trade, I would say you want to stay under 3 max. You probably want to be under 2% risk per trade, but definitely not over 3. That's risking a lot per. Ooh, finally started trading live in my first month, 6%. What do traders typically make on a monthly basis? All depends on the trader. Again, it's very hard to answer questions like that. What do traders? Because most traders don't make anything. I'll put it that way. Most traders will lose. 90% of traders lose 90% of their account in 90 days, right? I can tell you what professional traders do. Typically in this industry, you're considered to be a good trader if you can average 2% throughout the year. Again, no money management, no position sizing, just a straight 2% average, right? If you can average, I'm going to forget these numbers. What was it? If you can average, 6 to 8%, then you're considered one of the best traders in the world. Again, that's averaging out throughout a year. So I typically, if I'm in like that 3% range per month on average, and that doesn't mean, it means, 10% month and then a minus 7% month and then a 5% month and then a 2% month stuff. It goes back and forth. It's not 3% each month, but it just averages out to that. Then I know I'm on track. That's typically where I'm at. So if you're anywhere in that range if you're above 2% a month on average, you can consider yourself a good trader. If you don't go broke by the end of the year, right, you can consider yourself better than most traders, unfortunately. Unfortunately. Using a 40% win ratio, 2-to-1 risk reward, fixed trade size, 1 year to double your account. I hate math like that. Don't even do math like that. Do this. Take a look at your backtesting results. I hate people doing math like that, man. I don't hate people. I hate when people do math like that, because again, it gives you a false expectation where you're sitting there. I used to do that. I used to be like, okay, if I could just make 20 pips a day, right? Trade 5 days a week. That's 100 pips a week. And I can make 400 pips a month. And then if I do that every month, I'll make almost 5,000 pips a year. And then if I double up, then I'll do this. And none of that actually happens. None of that is realistic. So here's the best thing you do. Go through your back testing results, right? Because that's the closest thing you're ever going to get to showing what your strategy actually produces. Go to your back testing results, right? Look at those numbers. Probably take about 5% off whatever those numbers is, just to take into account mistakes and missed opportunities, and then use that to give you a realistic expectation of what your system should produce. That's what you should do. Don't make this stuff up. Don't say, okay, well, best case scenario, if I make 300 pips a day, because that's just, is anything proven that could happen? So go to the back test results, because that's proven based on how you will be trading. So I'm taking into account being wrong. Well, how do you know you're going to be wrong 60% of the time? How do you know that? How do you know? You don't know. You could be right 60% of the time. No, I am lit. Okay, James. All right. I'm at the end of my second week trading live. I'm up 3.5% so far, risking 0.5 per trade. Here's what you do, James. Finish your back testing, look at your back test results, and I'll give you all the information you need. Sounds good? Perfect. Good. Man, guys get me upset on I'm getting riled up on a Friday. Getting riled up on a Friday. It's supposed to be my relaxed day. Have you ever heard of Online Trading Academy? Yes. Yes, I have. Do you trade more than one strategy at one time? Example, advanced pattern formations and pin bars. What do you think is the maximum strategy that a good trader can trade at once? I do. I think you could trade as many as you can handle. It kind of goes on the same thing about setting up your trading portfolio. You have to be able to know how much can I handle to the point where it doesn't start negatively affecting my trading. You don't want to do too much, because there comes a point where you start doing too much that you have to start sacrificing something. So you got to find that mesh point where you can trade what you want to trade, whether it be a bunch of pairs or a bunch of strategies, but it's not having a negative effect on your results. It varies. They said how many pairs of professional traders? It varies. I know traders that they screen 20 pairs. I know traders. There's a client of ours that just he went into his first year of live trading this year. He trades a single pair. All he trades is the euro dollar. All he trades is the euro dollar. Trades one pair. Massive success. He shot me a note the other day. He said by the end of the week, I think he had one trade on. At the end of the week, he said the worst case scenario is I'm going to be up 266 pips. I'm like, that's a pretty good worst case scenario. So he's trading one pair, single pair. And he's just been very efficient on it. I'm currently trying Wyckoff strategy in combination with David Wells volume analysis. Do you have any experience with the type of trading? Not familiar with the David Wells deal. I don't know what Wyckoff strategy you're referring to. I do. I am a fan of Wyckoff's cycles of how the market moves. I'm a big fan of that, but I don't know the specific strategy, so I can't give you any advice. I don't have any experience with it, but I do like the Wyckoff cycle of accumulation, markup, distribution, markdown. I think that's something I've always been a fan of. If you're trading $1,000, again, I mentioned this earlier, I wouldn't even advise trading. I would advise learning to trade and saving up to trade a bigger position size at a later starting date. If you do need to trade micro lots. Leverage doesn't make any difference. I'll tell you that. Leverage only makes a difference if you're trading the wrong way. Aside from that, leverage makes zero difference in your trading. unless you plan on over leveraging yourself and blowing your account. I don't trade volume. I'll tell you what, there's no real volume in the Forex market. That's why it's hard to trade volume. So it's not like the stock market where you can see the volume. You can load up a level 2 deal and see the volume at each particular level. There's no true volume in the Forex market. So it's very hard to use a volume indicator. Well, let's say this. You can use a volume indicator. You just have to be aware of how you're using it. Be aware that it doesn't represent the true volume in the market. So just be aware of that what you're seeing is not really volume. You can still use it, but it's not really volume because there's no true volume in the Forex market. Ooh, Liberator, nice. One of my favorite systems. What's your minimum recommendation to start with? If you check out the YouTube page, I did a video a couple days ago. Go ahead and watch that video. It's, I think the Trading Blog episode 30, maybe. But we talked about, episode 30. How much should I start trading with? So when this deal is done, go over there and watch that video. I don't use any fundamentals. I'm a technical trader. Yeah, you could use, you can, another gauge of volume would be the candlestick size. Yeah, that's certainly something you can use. Volume and momentum, actually. Call it more momentum than volume, but yeah, same thing. Can you teach us about correlations between each pair? I can. This is not the place right here, but I can, yeah. You mentioned micro lots. I'm doing that because of the psychology of trading real money. Yeah, I think that is a benefit. Get used to what it feels like to earn and lose money. I think that's very important because demo trading is a lot different than live trading. It's very easy to trade when it's not actually your money at stake. There's no emotional attachment. When it's your live money and that heart start beating and your hands start shaking and you're sweating, it's a whole different ball game. It's like going from the majors to the minors to the majors, right? It's like going to for you guys over in the UK, like going to the top league, right? Like getting invited to the Champions League final. It's a whole different game when you're out there in that big stadium and everyone's cheering. It's a whole different game than playing in your backyard. How do you deal with taxes each year? I pay my accountant to do it. I pay her good money to keep me out of legal trouble. Seriously, I'm dead serious. Pay someone that is a professional in that aspect. Yeah, this is what she gets paid to do. This is what she is a master in. I don't know if there's a better word, but she's a master in that, right? She's a professional in that area. So she gets paid to not make the mistakes that I would make because I don't want Uncle Sam knocking at my door again. It's not fun when that happens. Trust me. Getting audited is not a fun thing. Not a fun thing at all. Do you advise setting up as an LLC when going with live trading? Yeah, I advise setting up some type of business model, especially if you're going to go on and build a business out of it. If you're just trading for yourself, you don't have to. But if you're going to go on to do education or money management, I definitely advise setting yourself up as a business just to keep yourself personally separated from any legal issues. An LLC is a very easy one. You can also do an S Corp. I just had a very good conversation with our futures trader, Mark Sedlock, who's talking about the benefits of using an S Corp instead of an LLC. And there's pros and cons to both. But yeah, definitely, if you're going to get into education or if you're going to get into any type of trading business, right, aside from just trading for yourself, definitely recommend separating yourself from your trading just because you always want to plan for the worst case scenario and you don't want to be held personally accountable. Does your trade platform keep track of your P&L or do you keep it? Both. We had a good conversation earlier in the week about some outside sources you can use as well for kind of more data keeping. I'm not an accountant, consult yours. Yeah, every country has their own tax systems as well. Why, when news released for the dollar, also euro to pound are affected? Think about the Forex market as being a big pond, right? And everything that happens has a ripple effect. And this is the big thing that a lot of traders don't understand. They're trading the Canada yen. and US news comes out for the dollar, and they're like, why is the Canada yen moving? This has nothing to do with the dollar, right? Have you guys ever been there? You're like, what? This doesn't make any sense. Dollar news came out. Why is the Canada yen moving? Everything is affected, right? The market it has a ripple effect. Everything is a changing of money. So, for example, right now there's a big battle between, it's called the Trump trade, right? There's a big battle between the dollar and the yen, right? Between the safe haven, right? So when people fear, when people see dollar weakness, what do you think they do? People see dollar weakness, right? They remove their money from the dollar, and they got to put it somewhere, right? You don't just take it out and put it under your mattress, right? You got to put it somewhere. So they shift it to the yen. Oh, strong dollar. I want to buy the dollar. Guess what? Let me take my money out of the yen, right? And let me move it over to the dollar. So everything has this ripple effect. Same thing with the euro, same thing with the pound. There's a ripple effect everywhere, especially with the major pairs. You see stuff like the euro. You see stuff like, especially the dollar, the biggest one, that's going to have an effect on multiple pairs. Always a ripple effect on everything. You see a lot with New Zealand and Aussie. China news comes out. That affects those two. It's how like the global economy works, right? You have trade partners, and everything one country does affects everyone else in a different way. Kind of going back to like supply and demand again, like you think about, hey, let's say there's a tornado that wipes out a whole state worth of cows in Oklahoma. Well, how come my milk prices over here or my beef prices over here in Pennsylvania went up? Nothing happened over here. Right? Well, maybe that farmer was getting their beef from that farm in Oklahoma, right? Supply and demand, everything affects everything else. And then, that goes down, milk prices go up. Well, guess what else? Yogurt is affected because that's a milk product. Cheese, everything is intertwined in a way. There's a good book if you guys want to read on relationships, nothing trading related at all, but if you're interested in economics, called Basic Economics by Thomas Sowell. I loved it, right? It's a big, thick economic book. Big, thick economic book, basically with no numbers at all. Zero numbers in this book. All just relationships. Pretty cool stuff. Good question. How to trade divergence effectively? How to use divergence when the market is trading? Well, you can look for trending. It depends. You can look for regular divergence. You can look for hidden divergence. You can also call positive and negative divergence. But again, you don't want to use divergence by itself. You want to combine it with other factors of the market. So I wouldn't just look to trade divergence on its own, be like, ooh, divergence in the market, let's buy or sell, right? We're getting divergence right now on the pound dollar, right? But you want to combine it. You want to combine it with other factors of what you're seeing on your chart. So trading is like putting all the clues together. There's no one clue that gives you the answer. It's a whole bunch of different clues. And and this is called analysis, right? When you put those clues together, right, it can set up some very high probability buying and selling opportunities. But there's no one thing. How did you start supporting Everton? Americans played for Everton. So I was like, ooh, Americans. All right, let's vote for the team with the Americans on it. That's basically how it started. A couple of people are mentioning the cipher here on Euro yen. Go over my chart over again. We can enter this for the syndicate. Let's just make sure it's let's make sure everything is 46. No, I need to get a little bit higher. A little bit out of my risk profile. Let's just see where we're at here. 71. Yeah, if we get back into the 70s, I can enter up here. So we'll see if that happens before the end of the day. But a little bit over my 100 risk limit. All right. Any other? I did see I saw the highlights from the Barcelona match. Oh my gosh. Oh my gosh. Oh, disgusting. Embarrassing. All right. Any other questions, guys? Over an hour. So you're ready to head out. How many pairs should a beginner focus on trading? One. Single pair. How do you put your second target? You expected to reach the you can set both targets at the same time. Just set a limit order at one level and then a limit order at the other level. So you can do two targets at the same time. Which pairs are good to trade patterns? Whichever ones give you the best back testing results. Those are the ones I would trade. Do we have a bat on a New Zealand daily chart? I don't think so. Potential bat, Rodrigo? Or like an at market bat? I believe New Zealand was that previous structure last time I looked at it. And for you guys that are on YouTube, make sure you subscribe to this page. Make sure you check out the videos. And if you're interested in trading live with me, right, instead of just conversation, go ahead and join the live room here. No, not going to be a bat formation, no. Leslie said, can you cover gold? What's your question about gold, Leslie? Make this the last thing. Do you believe gold lows are done and will continue towards normal? Well, be careful with saying normal price. I never try to say I know anything about what the market is doing. Market does what it wants whenever it wants to do. So is gold done? Right? Is gold going to rally from here? I just don't know. I have no idea. I couldn't tell you. The only question you want to ask yourself is this. Does the current movement on gold meet anything in your trading plan? Is it at a level where you're supposed to buy it? Is it at a level where you're supposed to sell it? That's the only thing we can ask. Has the movement on gold met our rules of engagement? Because we can bounce off this level, right? We can bounce off this polar flip level with the cipher formation. We can continue all the way up to 13s. Guess what we can also do? We can continue down all the way to 1120s. I just don't know what's going to happen. None of us do. So I no way to tell if I believe gold lows are done. No way to tell if it's going to go up, go down. All we can do is trade the plan. So if something at this level meets your rules of engagement, take the trade. If not, don't take the trade. I know that's an answer no one likes, but that's the truthful answer. Yeah. Doesn't matter what we think. It matters what we see. All right. So let's call it a day, guys. Thank you for joining me again. If you're over on YouTube, if you're new to this channel, subscribe. I got a blog or a playlist called The Trading Blog. There's lots and lots of fun videos on there. There's also a playlist called The Forex Market Preview, where there's more technical analysis stuff if you're looking for it. And take a free trip in our live room. All right. Come in here for a free week with us. We have a great community of traders. We usually have about between 40 and 50 traders each day, where we come in and we spend 3 hours talking, but also breaking down some charts and looking for live trading opportunities and sharing ideas and whatnot. So it's a great place to learn and really get a sense of what the reality of trading looks like. You can do that just by going to tradingpower.com and clicking on either the London live room or the New York live room. All right. You guys enjoy your weekend. And until next time, plan to trade your plan. You guys have a great one.